Good morning, good afternoon, good evening, wherever you are. My name is Verna Ayukekba, and I am a Senior Vice President with the African Energy Chamber. Welcome, listeners, to the webinar, Unlocking North Africa's Gas Riches with a focus on Algeria. Now, this is a webinar series, part of a number of webinars which we at the African Energy Chamber are hosting to the run-up to Africa Energy Week, 29th of September to the 3rd of October, where we look forward to welcoming the world of oil and gas, the world of energy to Africa, to South Africa. We look forward to meeting all the speakers you will be seeing here and listening today, and many more, to be able to talk about key and important opportunities to be able to close deals in and around the oil and gas sector, including Algeria as well. I am a Senior Vice President with the African Energy Chamber, looking at international and strategic opportunities. Today, we would be talking about these opportunities with a host of gentlemen who have expertise in this particular area. We are going to be listening to Mr. Gavin Thompson, who is a Vice Chair, EMEA for Wood Mackenzie. We will be listening to Martin, who is a Principal Analyst, as well as Mr. Mourad Beldjehem, who is the Chair of ALNAFT, the National Regulator and Concessionaire in the Algerian oil and gas space. Now, the African Energy Chamber, for those who do not know, is a not-for-profit organization based out of Johannesburg. What we seek to do is to attract investments across the entire value chain in the oil and gas space. And so we look forward to continue driving such initiatives to ensure that there is more information as much as possible in the sector. And we're happy to partner with the likes of Wood Mackenzie, who have shown time and again that they have the right kind of expertise and data to be able to drive actionable analysis and investments in the sector. Now, the question a lot of people might be asking, why Algeria? Now, for a number of simple reasons. Algeria is the largest gas player in Africa. Gas has become significantly important in the world as, especially post-Ukraine, unfortunate Ukraine-Russia debacle. We have seen significant increase in African produced gas, and of course, Algeria has seen significant increase. Secondly, Algeria is strategically located very close to a large consumer market, which is Europe in that sense. Thirdly, one thing which is really close to my heart is Algeria is a textbook example of how you can update, change, and improve fiscals and be able to attract significant amounts of investment. So we're really looking forward to this, as well as information around what is in the upcoming bid round, which Mourad is going to talk about. So, ladies and gentlemen, without much ado, I'm going to pass on to Mr. Gavin Thompson. Gavin, over to you. Thank you very much.
Brilliant. Thank you, Verna, and welcome, everybody. And it's a pleasure to be speaking to you today. As Verna mentioned, we've got two parts really to the formal presentation. The first, the Wood Mackenzie view, primarily looking at Algeria and some of the recent changes, but also what we see in terms of exploration activity, corporate activity, and the potential to increase and maximize gas resources within Algeria. And at the back end of that presentation, I want to also talk a little bit about effectively gas competition for Algerian pipe supply and LNG supply, as we see growth in, for example, North American LNG, Middle Eastern LNG, and some potential, of course, however uncertain, for Russian gas to come back into Europe. But before we get to that, I'm going to pass over to my colleague Martijn. Martijn runs our North African upstream research. If you've got an eagle eye, you may notice that Martijn has a 3D map of Algeria, I think, over his shoulder, showing his dedication to the cause. And Martijn, why don't you pick up the story in Algeria, and then I'll take on the more of the regional and global gas story.
Sure. Thanks very much, Gavin. Delighted to be here sharing Wood Mac's view on Algeria, as Gavin pointed out, a country I'm very fond of, and one whose upstream sector has undergone a real renaissance over the last few years. So I'm going to focus on the country's gas production and what it means in a North African and European context in particular over the next 15, 20 minutes or so. So the story around Algerian gas production is really interesting. Until 2021, it was generally thought that Algeria's production would sort of continue on a declining trajectory. The country is very dependent on old legacy fields, particularly Hassi R'Mel, which is the bottom purple tranche of production, which still accounts for around half of the country's gas output. So it's the large gas field located in the center of the country, which acts as a gas gathering hub. And you can see a lot of pipelines converging there on the map on the right. But since 2020, as an OPEC member, Algeria has had its gas production constrained by quotas. Its oil production constrained by quotas to just over 900,000 barrels a day. These quotas now, of course, are starting to unwind slowly. So reduced quotas have meant that Algeria hasn't had to use as much gas for reinjection to support liquids recovery in mature oil fields. And Algeria's capitalized on this well, exporting increased volumes into Italy in particular, and benefiting from high spot pricing in Southern Europe in 2022, 2023. And since the war in Ukraine, Algeria has also sought to position itself as an increasingly important, I would say, and reliable supplier into Southern Europe with some success. And this has piqued the interest of many companies operating in the country's upstream sector, especially, I think, European companies with an increasing focus on energy security. And the second strand to the story is really the development of new greenfield projects, particularly in the country's frontier southwest. We've circled these projects on the map there on the right in the Regan and Gurara basins. And the first batch of fields, so Regan Nord, Timimoun, Touat, were developed around a decade ago with IOC involvement. They're remote, technically challenging fields, which are perhaps slightly underperformed, but Algeria is now getting a boost from a second phase of development in this area, the phase 2 fields, which are all 100% Sonatrach owned and operated. That's the yellow tranche of production that you can see on the chart. And the first of the phase 2 fields, Hassi Bahamou and Hassi Mouina, have now been on stream since late 2023. And coupled with the development of the Ain Sila field in the southeast, which came on stream early last year, and the ongoing development of Anit, another phase 2 development, we see Algeria being able to maintain sales gas production of around 10 BCF a day out until the end of the decade. Sales gas production did decline slightly last year on record levels of production in 2023, but production so far this year has rebounded. And our outlook here excludes any contribution from yet to find or discovered resource opportunities, which we expect Algeria to start awarding this year, and also unconventionals. But any contribution, I think, from these will likely be post-2030. On unconventionals, the country has enormous, although largely untested, potential, particularly for shale gas. And it finally looks that Algeria is really starting to get serious, I would say, about shale gas development, having signed separate memoranda of understanding with both Exxon and Chevron last year. So these MOUs could potentially be firmed up this year, but I think commercial production is still some way off. We at Wood Mackenzie think that Algeria really needs unconventionals to contribute to its supply mix if it's to maintain its position as a meaningful supplier into Europe, given the maturation of its conventional resource base and also increasing domestic demand, which we expect to grow at around 2% per annum out until the mid 2030s. So if we could move on to the next slide, please. So here we're looking at capital investment out to 2029. And part of the reason for this mini renaissance in Algeria's upstream sector is improved fiscal terms. In 2019, the country introduced a new hydrocarbon law, the 1913 terms, which we consider a marked improvement on the preceding 2013 terms. So Algeria's tinkered with its fiscal terms quite a bit since 2005, making terms tougher initially with the introduction of new concession terms in 2005 and a windfall tax. And the result was some reduced foreign investment and Algeria carrying an increased share of the capex burden with no real growth in production to show for it. And Algeria introduced new terms in 2013, but these generally didn't hit the mark with investors. We think that with the 1913 terms, it finally seems to have got the balance between reward and prospectivity right. And we've now got 8 contracts on the new 1913 law. Many of these are conversions of existing contracts, and I'd expect to see other contracts both converted and awarded this year as well. And these new terms generally come with big capital commitments, and so far we've seen over $8 billion committed, around over 4 billion of which is attributable to foreign investors. So I think this is a decent result for a relatively mature producer and represents something of a marked turnaround from the outlook a decade or so ago. And although we show a fall in capex towards the end of our forecast here, I think this will be flattened out by new projects, discovered resource opportunities and exploration success. If Algeria could get to a sustainable level of maybe 40 to 50% of its total capex bill being funded by foreign investors, then I think this could be considered a win. If we could jump to the next slide. If we look at the new terms, we can see that overall, we think that state share has in Algeria under the new law comes in at around 70 to 80% for both oil and gas projects. So this is based on our hypothetical model fields of 50 million barrels for oil and 250 BCF gas field. And our view here includes Sonatrach's share, which is typically 51% in concession contracts and PSCs. It can, of course, be less. And under the new 1913 law, contractors have the option to select concession, PSC, or risk service contracts. Most have opted for PSC terms thus far. And as mentioned, we think the terms represent a marked improvement on the previous fiscal terms dating from 2013. Government share, we think, and returns are competitive in a North African context, similar to Egypt and Tunisia, for which prospectivity isn't nearly as high as Algeria. If we could jump on to the next slide. I'm not going to spend too long on details of the bid round itself, which I think Mr. Beldjehem will cover in greater detail. There are 6 blocks on offer, 3 in the southwest, which are more gas prone, and 3 that are oil or wet gas prone in the east of the country. There are several TCF worth of discovered gas resources on some blocks, notably Regan 2 and the Toile block in the east of the country. And the focus in this round is really on infrastructure-led exploration and time to market, which has historically been a bit of a challenge in Algeria. But with costs on gas processing facilities and infrastructure in the frontier southwest now sunk, I think incumbent IOCs in the area will certainly be interested. And this round is I guess it's the first in a decade, but it's also the first under these new terms. So it's really going to be a litmus test as to whether the new fiscal terms can attract exploration dollars. We've tried on the chart there on the right some of it doesn't look like it's come out quite right, but to map the interest of Algeria's incumbents in this bid round, where the size of the bubble represents that company's remaining resources in country, and then using Wood Mac's corporate service, we've tried to chart how core Algeria is to this particular company and the maturity of its Algerian asset base. So we anticipate strong interest, I think, in the round overall from incumbents, particularly from the Euro majors. I think Eni and Total Energies will likely be interested. Eni has really doubled down in Algeria over, I would say, the last 7 to 8 years or so, acquiring BP's legacy assets in Salah and in Amenas in 2022, and then increasing its position further last year through the corporate acquisition of Neptune Energy, where it acquired Neptune's stake in the Touat field in the country's southwest. It's also partnered with Sonatrach a number of discovered resource opportunities, North Burkina and South Burkina, which it succeeded in bringing to market in relatively short time. Algeria also is a core country for Total Energies, where the company is currently progressing notable drilling campaigns at its Tonfouille Tabancourt wet gas development in the east of the country. And in addition to the Euro majors, I'd say that we'd anticipate strong interest as well from Asian NOCs, for which Algeria has historically been popular with. So Pertamina, PTTEP, potentially Sinopec and PetroVietnam as well. So most of these Asian NOCs have got big oil producing weightings in the country, but they're increasingly showing appetite to get involved in the country's gas sector as well. PTTEP actually acquired a position in the Touat gas development at the very end of last year, acquiring Engie's sort of last remaining upstream position. So in addition to these incumbents, I think we could also see several newcomers into the country too, perhaps within consortiums which include existing Algerian players. And ALNAFT has stated that 22 companies have pre-qualified for the round thus far, perhaps a slightly more now, but I think this bodes well compared with previous offerings. If we could jump on to the next slide, please. So in terms of our longer term outlook for Algeria's gas production and exports in a North African context, we can say that we think Algeria will remain the most resilient gas producer in the region. It's got much bigger gas volumes, I think, to underpin longer term supply than Egypt or Libya. And our production view here, remember, excludes any contribution from yet to find or discovered resources yet to be awarded, or indeed the country's unconventional potential. So I think that the dip you see post 2030 will likely be smoothed out. Egypt, we expect its gas production to continue to decline in the absence of any material discoveries. It will become, we think, increasingly reliant on piped imported gas and also LNG imports to meet its huge domestic market. We expect Libya to increase its gas production towards the end of this decade, and this is through the development of large offshore gas fields, and based on projects that have been sanctioned, and the fact that they're offshore, I think, as well, means that they aren't subject to the same level of risk as some of the onshore projects in country. And then the dark green bars on the top, they represent Cypriot gas production. So we think that some of the offshore fields in the Block 6 and Aphrodite, if they start taking FID this year, could come to market perhaps in 2028, 2029, making use of existing infrastructure and heading to Egypt. So for the region's exports outlook, we do see Algerian exports declining longer term, and this is due to decreasing gas demand in its main markets in southern Europe, A number of key contracts with buyers end in the 2027 to 2031 period. And we think that some European demand will be displaced by a new wave of US and Qatari LNG projects entering the market. Beyond Algeria, we see some increase in Libyan piped exports, albeit from very low levels, and this is towards the end of the decade. These exports will be piped via the much underutilized Greenstream pipeline from Libya to Italy. And then at the end of the decade, we'll also see a rebound in Egyptian LNG exports. And this is prompted by the arrival of Cypriot gas into Egypt for re-export, likely out of the Damietta LNG export terminal. What we don't show here is Egypt's LNG imports. And we think that Egypt will be a huge importer of LNG in this period. It's already gearing up for summer, having secured 4 FSRUs capable of regasifying and delivering 3 BCF a day of gas into the country. And imports are only likely to grow in the face of declining domestic production in Egypt. So Algeria really represents, I think, Southern Europe's best bet for low-cost imported gas as part of a diversified supply mix. And I'll now hand over to my colleague Gavin, who'll talk about the outlook for European gas demand and global LNG supply growth.
Great, thank you, Martin. Yeah, I mean, it's a really, I really, appreciate the way you finished that, Martin. Talking about, the broader supply outlook out with Algeria, and I want to pick up on that, looking at pipe supply into Europe, but also this growth in LNG. And you can see here on the slide the growth on the left side, the FID forecast. So this is when companies announce a final investment decision on new LNG supply, and then on the right side, when that LNG is expected to hit the market. And so, we expect LNG supply growth will be pretty limited this year. But it's really from 2026 to 29 that we get this pretty significant wave of new projects hitting the market. Average annual supply growth around 35 million tons per annum of new supply. And we're seeing this coming from a number of places, but really, what we're doubling down on is Qatar, but also the upside in the US. And you'll be very aware, of course, that amongst the raft of executive orders signed by President Donald Trump in January was one to lift the pause on new LNG export approvals. That has been quickly followed by the first new export permits. And earlier in the year, we saw Woodside take FID on its 16.5 million ton per annum Louisiana LNG project. And others look set to follow quite quickly. So we now anticipate that we could get up to 6 US Gulf Coast projects taking FID by 2027. That would add about 68 million tons per annum of new supply on top of the 65 million tons per annum that's currently under construction. But if you look at the LNG supply response, that sort of grey shaded area on the right side, you can see that could be higher. There is certainly more capacity looking to move forwards in the United States in particular, that could take FID, as well as other places, including, of course, Middle East, Canada, and East Africa. Next slide, please. So what does this mean for European gas markets? I begin by saying that European gas demand, after the shock of the loss of so much Russian pipe supply in 2022 or through 2022, and the European Union's response to that, overall European gas demand remains pretty strong until around 2030. And in part that's because we've got a slower pace of decarbonization, we've got weaker industrial electrification, slower than anticipated heat pump deployment. But if you look further out, you'll see that the continent's ambitious decarbonization policy continues to drive that structural long-term decline in gas demand. But at the same time, the chart in the center, that sort of purple line, which is the highest in terms of the supply mix in 2020, which is European gas production, it's pretty resilient through the short term, but it will soon enter pretty rapid decline as Northwest Europe legacy fields mature. Norway, which is the largest contributor to European production, is trying to sustain flows by maximizing recovery rates from existing fields and near field exploration and development, but it's insufficient to stop volumes falling away beyond 2030. And then finally, the ever-changing geopolitical landscape is impacting the European gas market. So if we look at the potential outcomes of a Ukraine peace agreement, we're clearly in a very uncertain phase regarding the outcome. But President Trump remains determined to broker a peace deal. That has big implications for European gas markets. And as you'll see on the right-hand side, there is significant upside and downside in terms of Russian gas supply, both pipe and LNG, into Europe based on the outcome of a potential deal. Now, I'm not going to speculate on the how and the when the conflict in Ukraine ends. But we have looked at this, Wood Mackenzie, 3 potential outcomes: no peace deal, a peace deal effectively forced on Ukraine by Russia and the US, which leaves Europe unhappy, or a mutually acceptable and lasting peace agreement. And what that chart shows you is you get such a range of supply sensitivity, effectively 100 BCM range, which could result in more Russian pipe gas coming into Europe, more Russian LNG coming into Europe, or less Russian pipe and less LNG. And so it's a really difficult call to make a accurate prediction on what happens with Russian gas. But one thing that seems to be certain is even if no Russian molecules are in the market, Russia will continue to influence the outcome for European gas markets. Certainly kind of food for thought there. I think we'll wrap up here from the Wood Mackenzie side, Werner. I know that Mourad is itching to get in and talk about everything that's been happening in Algeria.
Thanks. Thank you very much, Gavin. Thank you very much, Martin, for that. Quite insightful. I can see there are already some questions that are coming in. I do urge participants to put in their questions, and we will address them after we've heard from Mourad. So please do let the questions keep coming, and I will pass on now to Mourad, who is chairman with ALNAFT, the national regulator for the sector, for the upstream sector in Algeria. Thank you. Over to you, Mourad.
Thank you. Thank you, Werner. So next. Why choose Algeria for energy investments? So we're used to talk about the good rocks, saying that Algeria has good rocks with certainty. We have 60 years oil and gas industry, strong oil and gas industry, and strategic location. Everybody knows about this advantages. Today we are talking about all what has been changed in Algeria to improve the doing in oil and gas business. So Algeria is the largest country in Africa. It's vast geographically and stable legal political environment provide a robust foundation for business operations and foreign investment. Supported by a resilient institution, investors enjoy predictability and security over contract duration. So this is now known in Algeria. And the macroeconomic reforms, which is the new thing that happened in Algeria, which is happened within the last 5 years. Algeria has implemented bold reforms to strengthen its macroeconomic landscape. These initiatives have significantly improved the business environment, particularly focusing on attracting foreign investment through specific legislation and enhanced investor protection. So my presentation today, I won't talk to operators only, but I also talk to the service companies. So the way that things are moving with the exercise we have done with the Algeria bid 2024. So we are connected to more than 40 operators. This is a huge number, and I consider that's enough for us. Yeah, we need the service companies to come to Algeria because we need more rigs, more service units, more service service jobs in Algeria. Next. So the first thing which is related to our domain is the hydrocarbon law 1913. So investor focused legal framework. The law strikes a balance between preserving state interests and addressing foreign investor expectations. It provides a stable environment offering transparency, clarity, and legal certainty, essential for making long-term investment decisions. We have a competitive fiscal terms and flexibility. Investors benefit from reduced tax rates for high risk and unconventional resources. So this one is very important because we you know the royalty in the new law is 10% flat, but we have this reduced rate for high risk and unconventional resources. So this also is an incentive to push operators to explore and work on this areas. Flexible contract models, as you said, participation, production sharing, and risk services, and improved cost recovery mechanism. These features enhance Algeria's competitiveness among global hydrocarbon producers. So we can compare and do a benchmark, and you will find that the new fiscal regime is attractive. Simplified taxation and procedures. The new law streamlines the tax system and adapts fiscal terms to foster development of hydrocarbon resources, focusing on offshore and unconventional plays. This simplification reflects both geological potential and international competitiveness. Enhanced project execution. Operational decision-making is now more agile, with minimized bureaucratic barriers and fewer approval steps. The law aligns contractual provisions with top international standards, ensuring a smooth process for oil and gas activities. Next. A new investment law. This is very important more for the service companies. Streamlined administrative processes. Investors benefit from simplified approvals for business setup and expansion, as well as significant tax and customs exemptions, especially in priority industries like energy and manufacturing. To support industrial development, the law makes it easier to access industrial land through long-term leases under favorable conditions. Repatriation and local content incentives. Foreign investors have full freedom to repatriate profits. Once initial investment commitments are met, capital and dividends can be transferred without restrictions. The law incentives local hiring and sourcing, rewarding engagement with Algeria's workforce and domestic suppliers through preferential contracts and fiscal advantages. One of the advantages we have in Algeria, we have our NOC Sonatrach. It's a trusted national partner. A global energy leader, Sonatrach is Africa's largest gas company and ranks among the top 20 energy companies worldwide. Its established reputation and a history of successful partnerships assure international investors. Collaborative opportunities. A recent trend shows growing interest from international oil companies, IOCs, in partnerships with Sonatrach, reflecting confidence in Algeria's legal and commercial frameworks, and paving the way for balanced, mutually beneficial collaborations. Algeria's resource potential, conventional and unconventional reserves. Algeria boasts over 6 decades of oil and gas production, with 1.6 million square kilometers of sedimentary basins. Significant underexplored and unconventional potential remains, including the world's third largest shale gas reserves at 700 TCF. So just behind Argentina and I think United States, I think. Modern infrastructure, state-of-the-art processing, robust upstream industry, and 22,000 kilometers of pipelines provide surplus capacity. Strategic pipelines like the GR5 facilitate new production, while export infrastructure ensure guaranteed international market access. As Martin highlighted in the presentation, we have facilities spread over all the Sahara, the south part of Algeria, and now we are our strategy is to produce all the new discoveries in the existing facilities, which makes our time to market very short. Next. Strategic market access and human resources. So global market connectivity. Algeria export infrastructure includes more than 43 BCM a year for transborder pipeline capacity to Italy and Spain, plus, let's say, 37 BCM a year equivalent LNG export facilities, guaranteeing reliable gas export for JVs. Skilled workforce. Algeria's well-trained engineers, geologists, and technicians form of strategic assets. Collaboration with international partners fosters knowledge transfer and technological advancement, ensuring efficient and value-driven partnerships. Commitment to ESG. Algeria prioritizes responsible resource development to safeguard our planet. Notable achievements include reducing gas flaring from 42 BCM annually to around 2 BCM, pioneering the carbon capture initiative with the Kreshba project, and ambitious target for zero methane emissions. Adherence to ESG principles demonstrates Algeria's commitment to environmental stewardship, global safety standards, and transparent governance, making sustainable development central to the country's energy strategy. ALNAFT, the National Agency for Development of Hydrocarbon Resources, regulates and oversees oil and gas exploration across Algeria's sedimentary basins. Its mission to maximize value for Algeria while building trust with partners through competitive licensing routes, streamlined regulations, and investor-focused fiscal terms. ALNAFT works closely with Sonatrach, leveraging the latter's operational excellence and international reach to foster successful investment and technology transfer. Investment access, licensing routes and bid opportunities, transparent, competitive approach. So ALNAFT's 5-year plan features multiple licensing routes focusing on high potential geological zones, combining greenfields and low-risk brownfield assets to attract a spectrum of industry players. Current and upcoming bid round. So bid round 2024 is underway with more than 40 companies expressing interest, and the bid opening ceremony is scheduled for June 17th. The bid round 2025 launch is for Q4, presenting attractive opportunities for IOCs to engage in Algeria's hydrocarbon future. Conclusion, partnering for energy excellence. Algeria presents a compelling investment proposition with robust resources, progressive legislation, world-class partners, and a strategic location. IOCs, expertise, and innovation are especially evaluated to shape sustainable energy growth. Opportunities await operators and service companies in upcoming bid rounds, with Algeria committed to supporting JVs, technology transfer, and new development. Thank you.
Thank you very much, Mourad. Thank you to the team. That was quite insightful. We have a couple of questions which have come in, and I'm just going to shoot through without further ado to Martin and ask, why are companies, do you think, going for PSCs rather than risk service contracts?
Well, yeah, as I mentioned, most of the contracts that we've seen under the new 1913 law thus far have been on PSC terms. It's probably a variety of reasons for that. Within PSC terms, the contractor can I guess, have a bigger share. There isn't the 51% equity right for Sonatrach, so it's a smaller position, essentially. Costs are also recoverable as well. And I think some of the existing contracts that have converted were on PSC terms as well. So those are really, I guess, some of the main reasons that we've seen most of the contracts, I think all except for one, on the new law be on these PSC terms rather than concession terms. But that's not to say that I think especially for anything new that's awarded, we wouldn't see these on concession terms.
Okay, thanks. And one for you, Gavin, looking at the European outlook in terms of the energy mix in Europe, how do you think the development of the uptake in renewables is likely to affect the Algerian gas industry?
Yeah, it's a good question. I mean, renewables have grown incredibly quickly in Europe, of course, but I think most of that growth in Southern Europe has been driven by the increase in solar capacity. But it's also important to remember that renewables and a combination of the limitations to renewables and the limitations to the pace of electrification still create a critical role for gas, and that has been proven through the energy crisis and also through the policies that have come out in the European Union since the energy crisis. The intermittency of renewables requires gas to maintain the integrity of power grids and power systems, particularly through that sort of early evening period when demand is strongest. It's also another reason why electricity prices remain high, is because of the role of gas in meeting that peak demand role. So I think if you listen to the European Commission and you look at individual country energy plans, what we've seen is that growing awareness that gas will continue to have a key role in the energy mix. Europe wanted to move away from gas quicker with REPowerEU in the wake of the war in Ukraine. I think there's a realization that that's not going to happen. It's coming through in terms of policy support for new gas-fired power plants, for more LNG contracting. We've seen it with FSRUs. So I think there has been a rebalancing of Europe's attitude towards gas, particularly from the major economies, which is starting to view the role of gas as a balancing fuel much more positively.
Thanks. And just a follow-up from myself, as Europe is likely to try and see if at all, they can get renewables moved up in that sense. Do you see possibly Asia being able to provide newer markets in that sense, LNG? We heard Martin talking about, the likes of PTT, Pertamina, and all of these guys looking much more at gas rather than at liquids in that sense, as they have been doing in the past, or possibly even Africa. There's been a lot of talk around trying to increase consumption of gas. I know South Africa is putting out the tender around gas reception terminals. Is that something which you think, can pretty much move into the place of declining European demand down beyond 2030, I could say?
Well, look, I'll answer your second question first. I mean, I'm the biggest advocate for more African gas staying in Africa and driving gas markets and energy markets forward. It makes such compelling developmental sense. As a gas seller, will you get the best price in Africa? Because that's what's driven exports over many years. Your first point around Asia, I mean, there's major growth in Asian LNG demand. It's almost like you have to find the reasons why you don't think it will happen, and those are probably around affordability and financing for infrastructure to build out gas markets. But it's a really strong story. I think there is a risk around high LNG prices having a sort of destructive impact on demand in emerging economies in South Asia and Southeast Asia. We know these markets are very price sensitive. We've just seen it through this winter when traded gas prices were around $14, $15, $16 MMBTU. So we know that price sensitivity exists. But the fundamentals, population, urbanization, economic growth remain pretty positive. Plus, of course, that need to switch away from coal through the mid to long term. So we see a lot of gas demand globally. Europe, as I mentioned, pretty strong through to 2030. Then we're going to get a decline. We know that will likely happen, but we're seeing strong growth in gas demand across Asia, Africa, Middle East. Europe is probably the only place where we really got decline because North American gas demand is also rising, as is South America.
Right. Thank you very much for quite insightful. Mourad, one for you, and this one is pretty practical. How easy it is to set up a service company. I see you were appealing at a service. How easy it is to set up a service company in Algeria? Number one, and do you have to have a partner to set up do you have to have a local partner to be able to set up and start an entity involved in the service space?
Yes, you have to get registered. There is a trade register, so you need to have and to access the market. So at least you have the first contract, and you do your promotion and it's very easy, to get registered and participate in the bids.
Do I need a local Algerian partner to be able to register an entity and be involved?
I can't tell. I don't know, but I think yes, you need to have, but to run your business, you need to have someone with you, Algerian entity, Algerian personnel. So I'm not sure about that, but I think it's very easy to get installed in Algeria and do business.
Okay, thank you. And next, am I correct to say if you're coming as an operator and you're looking to bid for the blocks, you need to know that Sonatrach is going to be a partner in that concession, correct?
Yes, that's correct. This is by law. Sonatrach is a partner automatically. So, Werner, so just the first question, talking about the participation and the PSC. The difference is the participation, everything is defined in the law, so you don't have to negotiate. You have nothing to negotiate. There is everything defined. For the PSC, you negotiate your contribution, finance contribution, and to increase your production rights, you have to finance more than 49. You can go to you can propose something like 100% and 0 for Sonatrach, so you'll get more production rights at the end. And till now, yes, we signed 5 contracts, PSC, and 2 participations. But it was the wish of the partners.
Okay, noted. Martijn, one for you, and I think the question here is, we have seen not just Algeria, but a couple of other jurisdictions in Africa as well who have increased terms, improved terms, changed terms. But it seems to me that Algeria has been quite successful since 2019 when the new terms came in to be able to attract significant investment from outside. What might Algeria be doing which the others are not doing, in your opinion?
Yeah, look, when I compare it to other countries in the region, I guess that I've got most oversight of, so sort of North Africa and the Eastern Mediterranean. At the moment, I would say it's got the wind in its sails. It's quite a favourable climate. There isn't the above ground risk, for instance, that there is in the likes of Libya. There's no issues around, getting paid that we've seen elsewhere in North Africa. So I think that certainly puts it in good stead. But I think one of the main driving factors, in addition to the fiscal reform that we've spoken about quite extensively, is also an increasing investor sentiment towards energy security since the war in Ukraine. And I think this is particularly prescient for some of the Euro majors, in particular Eni, which has had to find alternative sources of gas to displace Russian volumes in its energy mix. And it's a big buyer of gas from Algeria via pipe gas, via the Transmed pipeline. So increasing the availability upstream of gas in Algeria has been a big priority for Eni in particular, as the biggest upstream investor in country. And by doing so, it ensures ultimately that more gas is available for export. So I think energy security is definitely something that has benefited the country, in addition with these improved fiscal terms on the previous 2013 law and a general easing of bureaucracy and the pace at which companies can get things done as well. The rate at which, for instance, Eni was able to bring on one of the DROs that was awarded under the new 1913 law, South Berkane, was pretty impressive. So yeah, look, I think with significant investment in infrastructure as well, in frontier areas over the last decade, notably processing plants in the southwest and the GR5 pipeline, that will expedite the development of already discovered resources in this sort of up and coming area, and potentially exploration as well. And if this round is a success, then I think we'll see a return to annualized bid rounds as well, which has been successful for other countries, notably Egypt, as a way of ensuring that there's a constant inventory of acreage churning and prospects to be drilled on as well.
Thanks for that. So ultimately here, the significant demand drive is pretty much something Algeria is responding and reacting to, and those players like Eni are reacting to. One for Mourad here is pretty much a question around where does Algeria's green hydrogen, and I would add possibly blue hydrogen ambitions fit within the overall energy mix and energy security narrative, not just coming from Europe, but globally.
The green hydrogen is the South 2 corridor, which is ongoing right now. I'm not really involved in this project, but I will see. I will more talk about the solar the solar energy that Algeria launched to produce around 15 gigawatts by 2035, and this is a very important project for us because we will gain on gas to produce electricity. This gain of the gas, we will put it in the export portfolio. So yeah, this is the most. For hydrogen, I can't talk because I'm not involved in this projects.
Just one last question to you, Mourad. Can you tell us a little bit about the upcoming bid round, what we can expect?
You know, the first bid round 2024, we said it's a real test of the law. So the first real test of the law was the bid round 2024, and I'm very happy to say that we got interest from more than 40 IOCs from all over the world. We got companies from South America, from North America, from Europe, from Asia, and we're still optimistic that at least we will have 5 out of 6 blocks going this time, at least, I said, or 6 on 6. So the next bid round, we will select. We will select. I think that the same type of blocks, the mixed blocks where we have exploration and development at the same time. So we will select mixed projects that brings all the operators to participate in it. For the moment, it's not possible to propose a pure exploration or to propose an offshore blocks. Maybe 2026, 2027, we will propose an offshore block. So we will see with time. But for the next one, which is in Q4, we will keep the same strategy, proposing a mixed project, exploration and development.
Okay, we're looking forward to some more and major announcements at Energy Week in Cape Town when you come to Cape Town.
Inshallah.
Okay, thank you.
Thank you.
And Gavin, a last one for you. I mean, there's talk about, shale having plateaued. Depends on who you talk about in that sense in the US. But what is your view as to how that might, affect Algeria and other producers in Africa?
You mean shale gas plateauing?
Yes.
I think shale gas got a long way to go. I think tight oil might be a little bit more of a plateau story in North America, particularly where prices are. But I think there's a long way to go in shale gas. We're talking sort of dry gas. And what we've actually seen, particularly as some of the plays in the US are maturing, is that you're seeing companies in North America starting to look at places like Algeria, Argentina, the Middle East, where there is terrific shale resource to bring that technology, that ability to reduce costs and drill at scale. So no, I remain pretty bullish on shale gas. I think it's going to be a big part of the story for a global gas supply as we go forwards.
Okay, thank you. I think this is it for us. I want to take this opportunity to thank our speakers for having made time to be there, Mourad, Martin, and Gavin for having joined us. Thank you to everybody who's dialed in from across the world, and looking forward to seeing you all in Cape Town, 29th of September to the 3rd of October. Looking forward to carrying this conversation as well as many more conversations around oil and gas and energy space. Thank you very much. Bye-bye. And adieu. See you soon. Thank you. Bye-bye.